Will the SPY bounce off of 347.57 is the question everyone is basically asking. In today's video, we're going to go over the SPY, the NASDAQ, the IWM. We're going to take a look at the dollar, the 30-year bonds, and next week's interesting news that are basically going to be coming out. All right, so let's get started with the video. So the first thing that we're going to take a look at is that every morning, Monday, Tuesday, and Wednesday of this week at 10 a.m., there's going to be important news. So as we're scalping or day trading early in the morning, 10 a.m., there's going to be important news that's going to come out. So we have to be careful not to hold anything heavy around, 9:58, 9:59. We should not be entering into any trades because most likely the setup that does show up prior to 10 a.m. is just going to be a fake out. So we should be aware of that. All right. So basically Monday at 10 a.m. we have ISM manufacturing PMI news coming out. Then Tuesday at 10 a.m. we have job openings coming out. Wednesday at 10 a.m. So basically Wednesday all day we have OPEC meetings. But then Wednesday at 10 a.m. we have ISM services, PMI data coming out. Thursday is actually going to be the most normal day of the week. There's not going to be a lot going on intraday. But then on Friday morning, we have non-farm employment change, and then we have the unemployment rate. So Friday is going to be very important as well. So this week, the morning time is going to be a bit tricky to day trade. And then Friday is going to be the big day in terms of pre-market news. All right. Also on Monday at 11:30 a.m., there's going to be a Fed meeting at 11:30 a.m. on Monday. So we're going to have to see what happens. There's going to be something at 10 a.m. and 11:30. So essentially Monday morning is going to most likely be very choppy. The market might have a lot of indecision prior to the 10 a.m. and then we'll see how inflated IV is on the contracts as well. So we'll make an assessment as to which contracts we should be trading tomorrow. We could potentially trade the Wednesday contracts because the IV might be lower, so they could be safer. So we'll see. But it should be a very interesting week nonetheless. Let's take a look at the charts. All right, so this is a chart of the SPY. We see the picture that is basically being shown here. So we finally got a close below the range here. We closed below 360 and we're currently at 357. All right, so what we can immediately see at the moment is that the lower level of the Bollinger Band is sharply falling. We see that the MACD bounced as the price was falling. So that means that as this blue line of the MACD crosses down below the prior low here, the prior low was at a higher price. So this MACD situation means that there's a lot more momentum still remaining to fall lower. I hope that makes sense. So everyone should be, so the way that they closed this candle, they were basically forcing people to become short-term bearish because we got to close below this range. So what we now need to look at is that obviously these are going to be like the major levels. So we have 371 as a major level of resistance, 358.75, and then we have 354. We have this fib level here, and we have 347.57. So when zooming out and looking, basically making a fib level from the March lows to the all-time highs on the SPY, you can see that the 50% fib is at 349.12. And basically right below that is another major level of support. So this pocket here, if we end up closing below this pocket on the SPY, there is going to be a lot more room to fall lower. So this is going to be a major level where a lot of people are going to step in for longs, in my opinion. Especially given the fact that we have a lot of short-term momentum, weak momentum to the downside. I think this would give enough room for an impulsive move to the downside, and then potentially some sort of a bounce back to 357 to 358. It becomes good risk reward to go long over here. So that's what I'm currently looking at on the SPY. So now when looking at the NASDAQ, it's going to be the same concept. We just closed below 269.28. Then we have important support at 264.63, 260.11, the fib level, and then another basically major level of support at 251.52. So once again, when zooming out and looking at the fib levels from the March lows to the all-time highs, we can see that the 0.618% fib on the NASDAQ is at 258. So we have to take a look and basically use this zone again, similar to the SPY, to see if this can hold, right? But then this 251.52 level is going to be extremely important for the NASDAQ, because if we break down below that, then there is a lot more room to fall to the downside. So as we get closer to these levels on the NASDAQ, I think it makes more sense to get long. But at the moment, you can see very similarly to the SPY, there is a lot more room to the downside in terms of momentum for the MACD. We are trading higher on the MACD, but we're trading lower in terms of price. So when that happens, that means that there's a lot more room to fall to the downside. Also, the RSI is barely dropping here, which means that there's a lot more room to fall. Also, the lower level of the Bollinger Band is also very weak and in free fall. So that's also not good for bulls. Also, if you look at it in terms of purely percentage away from the 200 simple moving average, which is another good indication of how overextended something is to the downside or to the upside, you can see that in the past, the NASDAQ was trading at least 25 to 27% away from the 200 simple moving average. So at the moment, we're not yet there. So we're currently only at about 18, 19%. There's a lot more room to fall to the downside in terms of distance away from the 200. So also keep that in mind. Basically, there's truly a lot more room to the downside. It's all really going to depend on whether or not this 618% level holds for the NASDAQ and the corresponding level holds for the SPY. So now let's go ahead and take a look at the IWM. So same concept on the IWM. You can see that we closed below the 50% fib at 170.28. Now we have important levels of support down below at 162.78, 157.90, 151.63, and 144.25. But the main zone that we want to see hold is the 618% fib at 152.66 and basically at 151.63. So this area we want to see hold. And then again, this 144.25 level is major support. So these are going to be the two levels that bulls want us to hold. And very similarly on the MACD, this is very bearish. We're basically crossing out of oversold on the MACD, but the price is basically remaining stagnant. So that means that there is a lot more room to fall to the downside, very similar to the SPY and the NASDAQ. And truly, they're painting a very bearish picture, right, on all equities. But when that is the case, obviously you have to be short-term bearish. They're making it very difficult, obviously, to be bullish, right? But when fear and when the majority of people begin to become super bearish, right? That is when to start, just keeping an open mind. Because if everybody is bearish, they're not going to allow everybody to make money. So these are the levels that need to hold, and you could basically trade around these levels. You could trade around the various levels on the SPY and the NASDAQ as well. You could go long and short at these specific levels. But just remember that these are the most important zones, in my opinion, for the overall trend moving forward. And it makes sense to go long on support of those levels. And then if we start breaking below, it makes sense to go short. But yeah, always just keep an open mind. It's, going to be fun to trade. And it's also just very important to be aware of where the masses are putting their bias and how they feel about certain trades. All right. So there's that for the overall stock market. Let's take a look at the dollar and the 30-year bonds as well. So the dollar is making a bottom. It doesn't look like an extremely bullish setup, but we can see that it's holding this level of support. The MACD is still falling lower as the dollar is finding a bottom, which means that there's a lot of buying power currently that's holding the price up. So it's going to, we're going to need to see this level of support hold. And if not, then the dollar is going to fall much lower because the MACD is still falling lower. But if we continue getting this buying power and strength, then the fact that the MACD is falling lower, that would mean that there's a lot more potential firepower and room to the upside on the dollar. So this is setting up to be potentially an explosive move to the upside on the dollar if this upward momentum can continue. And then when you're taking a look at the 30-year bonds, though, the MACD isn't as strong, but we've created a bottom and we're holding sort of, you know, the 50% fib area of this bottom so far, right? But the MACD is not doing us any favors. So if the 30-year bonds basically break down below these lows, then the overall stock market is going to continue falling lower. But it's very interesting to see the 30-year bond not continuing to fall and seeing that weakness coming out of the equities. But we have to use the 30-year bonds and the dollar as forward-looking indicators for how the equities market is going to act. So if the 30-year bond can continue to hold this support at around 125, then if we start seeing a move upwards, a retest back to 130, but there's still clear weakness in the equities, then that would be a very, very good opportunity to buy dips, in my opinion, in the SPY, the NASDAQ. So what we basically, the best ideal situation would be is if we get strength coming out of the 30-year bonds, but the SPY and the NASDAQ, everything continues to fall. So if we get closes above major support on the bonds, then we can buy dips with higher conviction because we can see that the 30-year bonds are showing strength. So essentially, that's going to be the best case scenario. Let's hope that happens. But I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.